As New Year starts, most businesses focus on new goals and big plans. But one thing never changes: financial compliance. Unlike strategy or planning, compliance runs strict deadlines, and January 31st is one of the most important dates for small and mid-sized businesses. When filings are missed or numbers don't match, that's when penalties, notices, and unwanted follow-ups begin. And that's exactly what we want to avoid. I am Pratik Kapoor, your virtual accountant. In this video, I will walk you through the key financial compliance due by January 31st, so then you can start the year on a solid ground. First, payroll compliance. January 31st is a hard deadline for multiple federal and state payroll filings, and errors here trigger some of the fastest penalties. Start by reconciling gross pay, taxes withheld, and net pay. Make sure these match across your payroll systems, tax filings, and accounting records. By January 31st, employee must receive Form W2 and employer must file Form W3 with the Social Security Administration. You will also need to file payroll tax Form 941 for the fourth quarter and Form 940 for the full term. If you paid any contractor $600 or more, issue Form 1099 NEC and file it with the IRS, also by January 31st. Finally, review state and local payroll and wage tax requirements since rules vary by state. Once payroll is complete, the next area to review is transaction-based compliance. That starts with sales and use tax. Sales tax gets more complex as your business grows, especially across multiple state lines. Review total sales, taxable sales, exempt sales, and sales tax collected. Make sure everything aligns between your books and your sales platform. File December or fourth quarter sales tax return and remit any outstanding liabilities. Always confirm deadlines for each state where you are registered. Next, reassess economic nexus. Higher sales or transaction volume may mean you need to register in new states. Review resale and exemption certificates to ensure they are complete, current, and audit ready. Review vendor purchases where sales tax wasn't charged. If tax wasn't collected by a seller, you may owe use tax. Businesses must self-assess and pay use tax to their home state. After state tax obligation, it's time to check for federal and state income tax. Though income tax returns aren't due yet, but year-end is the best time to get your numbers ready. Reconcile book income to taxable income. Differences are normal. What matters is understanding why. Review key deductions in credits like depreciation, R&D, meals, and state taxes, and make sure they are recorded correctly. Confirm your estimated tax payments and prepare for federal returns like Form 1120 for C Corporation, 1120S for S Corporation, 1065 for Partnership or LLC, along with the required state filings. Finally, we have other required state compliances. Many states require entity-level filings each year. Even if your business wasn't profitable, these can include franchise taxes or gross receipts tied taxes and others. These taxes can be tied to operating in the state or business revenue or both, not just income. Reviewing these requirements helps keep your business in good standing and makes the start of the new year much smoother. If this list feels like a lot, you are not alone. Most businesses are busy balancing operations and growth, and compliance deadlines only add more pressure. That's where the right support helps. At Whiz Consulting, our virtual accountant work as an extension of your team, keeping your books compliant, deadlines on track, and risks identified early. So you start with January organized and confident. If this video helped, don't forget to like, subscribe, and drop a comment below. And I will see you in the next one.